Yo, what's going on, everybody? So in this video, I'm going to be teaching you all how to identify smart money inside of the market. Well, first things first, guys, who and or what is smart money? Well, smart money can be a person, it could be a group, it could be a company, an organization. It's really just anybody with a crap load of money. So much money that they can actually manipulate the market. When the market's at a support level and it looks like it's a good buy opportunity, smart money's gonna do what? They're gonna push it down. They're gonna hit your stop loss before the market goes up. Same thing with the opposite end. When the market looks like it's a good sell opportunity, it's at a resistance area, smart money's gonna push it up, hit your stop loss, and then push it down. Well, guys, who is smart money? I like to call them the big ballers. It's the banks, it's the governments, it's the hedge funds, it's billionaires. Guys, anybody with a boatload of money is considered smart money. Why? Because they can manipulate the market. And in this video, guys, we're gonna jump to my computer and I'm gonna show you guys exactly how to identify these areas and how we can play off of the manipulation. Just think about this. If we are entering when they're entering and we're exiting when they're exiting, we know exactly where they're getting into the market and getting out of the market. We're simply just going to ride the wave with them. Instead of fighting and trading against them, let's trade with them. So let's dive into my computer and let's get after it, guys.
Now, guys, what you see right here is simply a cheat sheet. Smart money simply moves the market just like this. They have accumulation phases, they move the market up, and then they have a distribution phase. They move the market down, and then they have accumulation phase. So accumulation phases are simply always going to happen at the bottom. We're looking for buy opportunities when the market is in an accumulation phase. Now, it's the same thing, but opposite for a distribution phase. If the market is in a distribution phase, we are looking for sell opportunities. Now, whether you know much about smart money or not, you may be looking at these phases, the accumulation and distribution, and you may be saying, it just looks like consolidation. Well, guess what, guys? You're exactly right. Because smart money wants you guys to view it as consolidation. They don't really want you to understand what's going on and what they're doing to manipulate you and to cause you to second guess yourself and cause you to just predict the trend wrong as a whole. And how do they do that? Well, they simply do that by selling before they buy and buying before they sell. It's pretty tricky, but follow me to the next chart and I'll show you guys what's good. So as the market trades down, we're going to have some sort of consolidation phase. Then the market's going to work its way back up and then have another consolidation phase and then work its way down, so on and so forth. The market is going to trend, it's going to consolidate, it's going to pull back. We all know the generics behind trading, okay? To simply put it, as simple as you can get, the market moves in three ways: up, down, and sideways. But that's really just for the retail aspect. The market really has precise movements inside those three movements. I'm not going to break all of those down on this video, but I am going to show you how smart money simply sells to buy and buys to sell, and how you can simply identify those exact areas so you'll know exactly where the best opportunity to enter is at. Now, looking at these phases, down over here, we would have that accumulation phase. Up over here, we would have a distribution phase. Down over here, we would have a accumulation phase once again. But right now, we're going to look down over here at this first accumulation phase, and I am going to show you, I'm going to draw it up, and then I'm going to show you a picture perfect opportunity that played in the market on Euro USD on the 4-hour time frame. Let me erase this. Let's go back to this. Now, for simple retail trading, what are you taught? Well, I was taught support and resistance. I'm sure most of you guys will agree with that. Equal lows, equal highs, double tops, double bottoms, all these patterns and whatnot. So, well, what do we see right here? Well, we have equal lows right here. We can draw out a zone. We have not quite, picture perfect, but we have, kind of equal highs as well. Well, as the market continues to trade down to this bottom zone, as retail traders, we are taught to buy at support and sell at resistance. So a lot of people are doing what right now, especially if the market is in a session such as London session or New York session. People are buying this. But what smart money does is they simply manipulate the market. And how do they do that? Well, they simply sell to buy in this scenario. So what does that mean exactly, Mitchell? Well, they're going to sell the market right here. They're not going to press buy. They're going to press sell. They're going to push the market down, 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 down. Now, why is that? Well, you see these equal lows? Because there's equal lows in the market, smart money knows that there is a lot of money sitting below these lows. Because if people are buying here, people are buying here, if people are buying here, well, they know a lot of people are also buying here. So they simply sell it and then buy it. But when do they buy it? Well, you always look left to get right. In this scenario where I'm at right now, we don't have any information to the left telling us to buy it here. So we're not going to buy it just yet. You'll see, just watch how it pans out. Now, whenever they decide to turn around the market, they will. So they're going to sell and then they're going to buy. Now, they are still going to be holding this sell position as they buy the market right here. So they're in sells and they're in buys. So if they're in sells right here, they're actually in some sort of drawdown. But why do they do that? Well, they have to sell it originally to then buy it. So let's say they sell it on, a good chunk amount of lot sizes to push the market down. Well, when it's down over here and they captured all the money that they needed, they're going to double down on the buys. So once they double down on the buys, it's going to skyrocket so quickly that they're not going to have time to close out this sell. So they're going to hold it in. But we love that because that gives us the opportunity that we need to capitalize on this trade after missing the initial sell to buy. So don't freak out just yet. So if this, let's say a candle formed right here, and this is where it pushed down. Candle opened right here, it pushed down. And right after that, let's say the market pushed right back up. Boom. And then it's made its way up over here to where the line's at. Now, what you do and how you identify smart money is simply by looking at big candlesticks, obviously. Small little candlesticks, smart money is not playing in those little candlesticks. When you see big bodies, that's where you know the smart money is at, because they can move the market. Now, you're going to simply identify that very last down candle before the up move. You're identifying where did they sell before they even bought. Don't even worry about the buy. Where did they sell? Where did they take the liquidity at? Where did they take the money at before they got into the trade that they wanted to get into? Well, it's the very last down candle before the up move. So what candle is that? It is going to be this down candle. This is the very last down candle that took all the money over here before it went up to the upside. Now, what do? It's simple. We are simply going to identify the open and the 50% of this last down candle. So what I do is I get my horizontal array from the open. I put it here from the open of this red candle into the future. Then I take my Fibonacci tool, do it from the high to the low of the bodies, just the bodies. That's where the volume's at. And then you're going to draw another horizontal array at the 50%, because 50% is where a majority of the volume is at. Now, looking at this, I'm going to draw a zone from the open to the 50%. Now, this zone right here, not this little one, this zone right here is the zone we're looking to capitalize on the trade. Remember, you have to look left to get right. You need to find where smart money got into the market, where smart money manipulated the market, and we're going to look to play off of those areas. So what exactly do I mean? Well, as they originally sold to then buy it up, they're going to eventually bring it back down to that initial area where they first sold the market. Why? Well, remember, they're still in a sell here. So they need to close out their position. They don't care to make money on the sell. They're going to make money on the buy from buying it down in here, right? But they need to break even on the sell before they can continue, because they have a heavy lot size. So eventually they're going to bring it down back to that sell area. And we are simply going to capitalize off of that and simply go in the direction that they are going in, right? They're not selling the market, they're buying the market. How do we know that? Well, because they sold it, and right after that big sell, we had an even bigger spike up to the upside. So as the market slowly trades back into here, we can capitalize and look for any buy opportunities right here in this gray zone from the open to the 50%. Boom. Stop losses, they go right below the previous lows. So it would look something like this. You could either enter at the open or you can enter at the 50%. It's completely up to you, right? You can enter right here at the open. You can enter right here at the 50%. It's up to you. Right now, we're just going to put it at the open. Stop loss is going to go right below the lows. So let's do about a 25 pip stop loss. And we're looking for the market to come back up to this consolidation, yada, yada, yada. And so your trade setup would look something like that. Look at the risk to reward. It all pans out. Beautiful. So moral of the story is identifying where the smart money is at. And guys, they're always going to sell before they buy. They're always going to buy before they sell. So when you see some sort of manipulation like that, look to then capitalize on that areas. Patiently wait for a pullback, and then you're going to take a continuation in that overall direction. Okay, so go back, do some back testing, and start identifying some areas where you have equal lows. Then the market took out the equal lows, then shot up, came back, retested, and continue off in that overall direction. Vice versa, if you have equal highs, look for them to buy the market and then sell the market right after that. Now here, I'm going to show you a picture perfect example on Euro USD on the 4-hour time frame. Guys, you can see that we have picture perfect equal lows right here. What does that tell us? That tells us that people are buying it down in here. People see this, retail traders are looking at this on an hour time frame, maybe 4-hour time frame. They see this thing's been going down, 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 right? When is it going to go up, up, up? So they're buying it when it comes down to this support level, and their take profit is probably going to be up in here in this resistance. So we have our resistance up here, we have our support down here, but we're not going to even look to enter until we can identify some sort of smart money, some sort of manipulation in the market. So as we play this out, what happened right there? Was that a coincidence or was that smart money? Let's find out. Well, as you can see, the market shot down and then immediately shot right back up. This candle right here is simply smart money showing you that they manipulated the market. They sold it right here to capture everyone's money, everyone's stop loss that's sitting under these lows, right? Think about it. If you entered right here, your stop loss is going where? Below this wick. Well, it went right below, captured all that money, and then it skyrocketed. So where would we look to enter? Well, if this is that last down candle before the up move, we're going to identify the open and we're going to identify the 50% of that candle. Draw that Fibonacci from the open to the close, 50%. We can delete the Fibonacci. So now what are we waiting for, guys? Very simple. Be patient, wait for the market to come right back into this area. As soon as it does, we will go ahead and we'll capitalize on the trade opportunity. So as we pan this out, you can see what happened and how quickly it happens. Came down in here perfectly. As soon as it came in our zone, it shot away. And as we play this out, boom, bada bing, bada boom, came up and hit our target right up in here. So as you see, it's a very easy to identify. The hard part for you all, because I say it's the hard part because I know it was hard for me. It's being patient. It's letting the market manipulate itself, identify the manipulation, and then capitalize on what happens from there on out, guys. So with all that being said, I'm going to show you real quick. I'm just going to draw it up for you guys. I'm not going to take time on finding an example, but the same thing is for the distribution phase. The market comes up, makes equal highs, aka resistance. We do have some sort of support over here as well. As the market comes back up to that area, people are going to be looking for what? They're going to be looking for sell opportunities right over there. Due to that fact, there is a lot of money sitting above there. Smart money is going to do what? They are going to buy before they sell in this scenario, because the money that they need to capture is above. So they're going to manipulate the market. They're going to buy the market first and then immediately turn the market right around and sell the market. As soon as they sell the market, we're going to patiently wait for it to get away. Once it gets away, patiently wait for it to come back to that area that we identified, which is the open in the 50% of that very last up candle before the down move. Once the market finally makes its way back up into there, we're going to press that sell button and look for the market to continue on that overall direction, which would be to the downside in this scenario. So guys, I hope you guys really understand how easy it is to identify smart money. And by doing so and identifying this smart money, you can simply follow the trends of the people that are having massive amount of success and just ride the wave. And it's that simple. So guys, if you like this video, I want you to subscribe and hit the bell because I have much more videos coming your way. Shoot me a comment, shoot me a DM. I would love to hear your guys' input on what videos you guys would like next. So I'm looking forward to hearing from you guys soon, and I will see you guys later. Let's get it.